So they call it a sell-side liquidity crisis. You're going to hear this more and more and more. And you got 30,000 Bitcoin pulling away every week approximately, and that's what that blue line is the accumulation. So we got about 1.6 million Bitcoin taken off the market out of a total of 3 million available Bitcoin that are out there every day floating around. Even if you do simple math and just keep it static, they need 30,000 a month for their funds. 25,000 are being put out by the miners, then where's the extra 5,000 Bitcoin come from? Well, that eventually dries out too. And that's what this whole program is about. So we got 1.4 million Bitcoin to go before we hit this liquidity crisis. Based on the 30,000 per week that is coming into the funds, then that gives us 6 months. Couple of things. Bitcoin hits all-time record high at the same time gold does. So what do those two things have in common is more the question. Cornering of the markets, both of them. It's a store of wealth and value, and yes, people are going to run to that. It's a known asset now, both of them. I mean, gold and silver have been last thousands of years, have been the safe havens. Bitcoin comes up, and it's something new. It's digital, it's electronic. A lot of people say, what if the power grid goes down? Well, you know, your ATMs won't work either. Your online banking won't work either. So this whole excuse of don't buy anything because it won't work if the electricity goes out. Well, neither will your bank cards. So good luck buying anything because they won't want to mess up their ordering system so you can't pay cash at the supermarket anyway. I digress. Moving over to gold. Now, here's the thing. Shanghai Gold Exchange right now is back up to this huge arbitrage. But gold, the highest it got was $200 an ounce over what was offered in the Western LBMA, London Bullion Metals Exchange, compared to what they were offering in Shanghai. So the siphon is continuing, and what I mean that they are truly trying to corner the gold market. Traders don't care; they just make money. So if you're going to take this physical gold, like you see these kilogram bars, 10-ounce bars, doesn't matter, and you bring it over to China, you're going to get hundreds of dollars more per ounce. So if you have a private airplane, you want to load up a 1,000-ounce bar, you come over here in a single day and you make 200 grand just unloading that one bar. Well, that's what they want. They want to draw as much gold and silver over to Asia as they possibly can. Because once they own it, then they've cornered the market. And then, you know, those who sell of Western banks, I mean, they're just putting it in the hands of somebody else who's setting up an alternative currency. You think Basel III, do you think that Basel III came out and set that as a tier one asset just because they woke up one day and said, oh, you know what, I think gold will be good again after 4,000 years? No, they knew absolutely that they were going to switch systems again. We're at the end of the road. Like the debt system can't continue in the function and fashion it is. It's going to shift somewhere else, but it has to be a reset first. Everybody's in on it. The whole entire global financial system is all working in unison. They all understand there needs to be a reset, and there will be. And once it resets, it'll shift, and then it'll start again, and then a whole new fourth turning will end up, and it'll be, you know, the development of Africa, the new crop zones, the new economic zones, the new manufacturing areas, the new ports, the new everything. That whole debt system that we saw our Western nations go from a bunch of farms after World War II into what we see today will just be replicated, copy-pasted in Africa. Africa will be as wealthy as the United States. You walk around 80 years from now in Africa, and you will not know the difference between America and Africa. It'll be that kind of wealth level of rebooting the debt system across the planet in all of these developing nations now, more assets thrown at them, and watch these places on a tear. In the first 20 years after this reset, these places are going to be gold mine locations. And that's no pun intended with the gold here, but I mean like incredible opportunity locations on the planet if you're able to get there.
The Fed took the punch bowl away from the party again. The stock market's been betting on March rate cuts, but not so fast. Is this why JP Morgan and UBS are calling for a 23% drop in the S&P? The recession indicator's ringing its most severe alarm in 40 years. Call the proud Americans, the Patriot Gold Group today before it's too late. Mention the Adapt 2030 channel. You're going to get some great in-class service. Also, Patriot Gold Group has a no-fee-for-life IRA where your IRA or 401k can be in physical gold or silver. No fee-for-life IRA on qualifying rollovers. Give them a call, 888-546-7020. And now on with the video.
So new record highs for physical gold. Yeah, it's approaching 2,200. It's barely scraped, and then it came right back down. Gold is the thing. But then here's the also interesting thing. Bitcoin nearly reached this entire capitalization of the silver market for just a brief moment. It overtook silver. Of the entire amount of silver on the planet, the dollar value of that out of the ground, not in ground, out of the ground somewhere in bullion form or whatever it is going to be used for industrial purposes. Bitcoin had surpassed that for a minute and bumped back down, but it's already getting to that point where it's now coming in and surpassing metals valuation of the planet, of the entire world. So there's legs behind this Bitcoin thing here. Believe it or not. Yeah, you know, the news would tell you otherwise. That's a scam. It's going to be this. Okay, it's going to be the base of the new stock market system as money shifts, like I talked about the last time we were on the program. Now, gold's moving from west to east. And here's another thing, like Czech National Bank going on a buying spree. So what do they know also? What about all these countries in the Eastern European areas just on a gold tear spree, buying like voraciously? And then we look at Turkey, adding another what? 7 tons in February, another 600 or 559 tons so far in the last few months. What do they know? And why are they buying so much? Because, you know, the last 50 years, it was never like this. So they, got us saying they woke up and said, I'm going to stretch. Let's go buy a bunch, 500 tons of gold. The entire financial system's in on it. They know the shift is here. So all they're doing is preparing themselves to have an asset to back their currencies again after the reset occurs. Now ask yourself, do we have the 8,000 plus tons in America or do we not? It hasn't been audited since the 70s? But all these countries are going to put all of this on the blockchain. See, that's the whole thing of this integration of, forget Bitcoin, forget Solana. Well, you can Solana and Ethereum, but the tokenization of assets is one thing. Real world assets, RWAs, that are going to be tokenized, but then also at the same time, like tracing that chain of custody, who holds it, who owns it, and you can see in real time and do a minute by minute accounting of gold holdings by nation. And that was never possible before, but it is now with blockchain. And, you know, once they integrate these two, then the believability of a nation when they say they have this or that to back their currencies will then put them in the driver's seat. But it's going to take the combination of blockchain and also physical metals holdings. But then watch this. You're going to watch the huge shift also. Real world assets will be tokenized. And again, you know, they'll be borrowing against that. Think of it as a collateralized loan, but in a digital form on blockchain based on your assets. So it could be your house, could be a piece of artwork, could be metals, whatever. But then you're more liquid. Because I want to hold my gold, but I would love to use the money of the gold value to go out and do something else. I'll wrap that in a smart contract. Somebody else will loan me against. I'll have to pay a little premium on that, a little interest. But, you know, if you're making money, it's okay. Because when you look at the wider scope of thing, this is in trillions of dollars, this chart here. Trillions, not billions, trillions. 1,000 billion is a trillion. So you look at the green line, that's central bank buying. And let me see, this last, since 2019, really it started upward. So you're looking at and adding how many trillions of dollars. Those are hundreds of billions. 1,000 billions is a trillion. And we're 1.5, 1.35 trillion. And the average person being talked out of their gold on the street, that's a black line going down. Now, why is it that divergence there? There's the question. Is it the news media convincing you that gold's like a barbaric metal, that you shouldn't own it? Like, what are we supposed to own then? Over here, it's the complete opposite. Every government is telling their citizens to buy gold. Get the 1 gram, get the 5 gram, get they have different weight measurements here. 37.5 grams would be a weight measurement. It's not exactly an ounce, but etau would be one of those. It's just 1 gram pieces they're encouraging. Can you imagine just in China, 1.4 billion people that buy 1 gram, and then some will buy 10, some will buy 20, some will buy an ounce. What about Korea? What about Japan? What about Taiwan? What about the Philippines? Indonesia? They're all telling them to buy gold. And India's, you know, just been gold crazy forever. But encouraging the citizens to get gold in the country too, that's a big one. So the shift has come in government and also individual wise. So what is it? What's going on here? Now you got to integrate this here, and this is the second piece of the puzzle that'll make way more sense. The reason I was talking about that first part of the integration of the Arctic Century, the new shipping routes. Now, the exchange-traded funds coming in on Wall Street right now are focused on Bitcoin, and that's the first one that's been approved. They've been trying to do Ethereum, but I'll go into it in a second. The exchange-traded funds, the inflows into these things are about 30,000 Bitcoin a week. Are these 23 to 25, depending on how you count them, and the interwovenness of one company owns two Bitcoin ETFs. There's about 30,000 Bitcoin per week going into this, because remember, the exchange-traded fund has to have the physical underlier. Like a gold trading ETF, they have to have the physical gold, like how many tons before they can offer the product. Well, it's the same way. They got to have the Bitcoin in a cold wallet somewhere on storage. And again, chain analysis, they have it or they don't. That's why it's hard to fake this one. That's why they don't, dishonest people don't like this, because you can trace it. There can be very little manipulation in terms of lies of how much you have. It's on chain, you can check it. So 30,000 BTC are running in there. Now let's do some simple math here. There's about 3 million Bitcoin out there available right now, because there's a lot of addresses where things haven't moved since like 2017. And then there's a certain amount that miners produce every single week. And then there's a certain amount that exchanges have, but they have to hold a reserve also. So they're kind of around the world, generally, there's about 3 million Bitcoin that are available for these ETFs to buy. 1.5 million of those are under control right now. And if we look at this chart, and you can see about 1 million Bitcoin have been swooped up here, there is a hoovering of Bitcoin going on, just as much as China's kind of take the gold over there. ETFs are trying to bring the Bitcoin into their funds because they can offer more product to the customer and to the consumer. Now, I want to break this chart down for you here. The blue line up and down is how many Bitcoin are moving into these exchange-traded funds, and then that gray line is the price. So as you look in the beginning around 2020, yeah, there were some funds that were bringing it in, but they were using as collateral, like Michael Saylor was bringing it in. Those lines are like Michael Saylor back in the day when he was buying that, and a few others that were following along, Grayscale, et cetera, that needed that for also their products that were offered in Wall Street. So what that giant spike over here on the right that we start to see this upward trend, that's all from the exchange traded funds buying right now to offer their product as of, I think they're going to begin on June 1st, which they can bring people in on it. So they're saying that there's 6 months left and they're going to have a liquidity crisis, meaning not enough Bitcoin. That's what that means in English. After 6 months, there won't be enough sellers of Bitcoin and miners to produce it for those that have endless pockets to buy it. And it's going to create a shortage, basically. I mean, there are going to be it'll get so high the price that some people will loosen it up and let it go. But what you keep in mind, if you're considering selling it of any fashion form, 1/10, whatever, it's probably not going to come back to you. A, the price is going to run away north, and B, the liquidity is just not going to be out there, and there will absolutely be massive premiums to try to get it back. Just like with gold and silver, when it gets really tight, those premiums, the spot prices over what you have to pay, get very high. I remember back, it was like $13, $14 for an American Eagle, a Liberty, to try to get that back in on the silver market. That was just ridiculous, like some of these overages. So they call it a sell-side liquidity crisis. You're going to hear this more and more and more. And you got 30,000 Bitcoin pulling away every week approximately, and that's what that blue line is the accumulation. So we got about 1.6 million Bitcoin taken off the market out of a total of 3 million available Bitcoin that are out there every day floating around. So you start to look at this and go, So CryptoQuant, great site. Go there. I use this routinely. There's like a million billion charts from Tuesday on this, and you can just analyze it and splice it and dice it whatever your way. But this is just new supply minting. So Bitcoin miners, they solve a block, they get paid out in BTC. So this will range from anywhere from like 850 to maybe 1100 on a week, on a day. So then when you multiply that by a week, you're getting around 7,000 to 7,500 Bitcoin per week that miners are actually putting out on the market. So keep that in mind too. 7,500, I'll be generous. But when you start to match that up, 7,500, and they're pulling in 30,000 a month, that's 5,000 below what they're pulling in per month right now. So even if you do simple math and just keep it static, they need 30,000 a month for their funds. 25,000 are being put out by the miners, then where's the extra 5,000 Bitcoin come from? Well, that eventually dries out too. And that's what this whole program is about. So we got 1.4 million Bitcoin to go before we hit this liquidity crisis. Based on the 30,000 per week that is coming into the funds, then that gives us 6 months. They're predicting that this is going to behave very strangely compared to other cycles based on the inflows. And hey, they're going to keep buying as much as they can get, because that's the whole thing. The more they have, the more product they can offer out to the public. The more they have under their belt, the more they can derivatize it. And I'm just wondering in the future if all these big banks swoop in all this Bitcoin and eventually they take 51% of the network, are they going to enact changes on it? Just curious. 51% of tax occurred back in the day and wiped out some coins, So I'm wondering what would happen. 2017, 18, the 51% attack thing was quite common, and then people built a lot of safeguards in there to prevent that from happening. But what happens if an entire industry takes up 51% of something that was thought to be impossible for that to happen, but we're seeing it happen? So even the impossible of things to happen is now possible. The whiteout chart shows you, the inflows there. It's going to surpass quickly, and there's going to be a lot more news about it. Then you're going to get the mother and father and the investment houses in offering everybody Bitcoin products. So this chart makes way more sense now when you look at it, the amount of Bitcoin coming in and out per month, and then this giant spike that's coming in as they get ready to go live and launch all these products on Wall Street. This is what we're looking at here. And that blue line going straight up to 1 million is going to continue as long as there's available supply. And keep in mind, the exchanges have, like Binance, for example, they have to hold a bunch back because they can't operate without it. So there's always going to be some that will never be available on the market. And that's the whole thing that you need to think about when you're looking at this. The liquidity crisis is coming. It had been forecast. And I kid you not, just 2 days later, the Dems come out and they're like, oh, we need to block all future crypto ETFs. So what they're going to do is, working in tandem with power brokers that are bought and paid for, they're going to try to pass legislation, at least put it out on the House floor, to try to spook people who are holding it, to try to sell it. Oh, I better get out now because look what they're doing in Congress. They might make it illegal, or they might do it, and I got to sell mine just to get what I can. Oh, the price is pretty high anyway. It's 67,000. Let me see. You know what? I'd rather take a little bit of gain and get out and guarantee I got my money. Thanks, Congress, for warning us how dangerous it is. You cannot tell me with a straight face. This whole analysis of we're going to come up to a shortfall and a liquidity crisis in Bitcoin in about 6 months, and 2 days later, they come out with all this new legislation that was pre-written already to spook everybody out of the market, to dump your Bitcoin. And who's going to be there to buy it, do you think? So I'll read you the headline. Desperate Dems demand SEC block all future crypto ETFs, pressure brokers to enormous risks. Okay, enormous risks. Enron. What's that? Thanos, or was that Terranos? What was that? Theranos, that one. FTC. What was that? Silicon Valley Bank. Tremendous risks offered by Wall Street. Financial crisis, Bear Stearns, Freddie Mae, Fannie Mac. The list goes on and on, doesn't it? Tremendous risks. Wall Street's a tremendous risk. Look back at the scams. Bernie Madoff, he was just the guy to go to, wasn't he? So for 9 straight day, 15th out of the 16th day, there's been an accumulation in Bitcoin off of these exchanges. And anybody out there selling, if you look at the order books down some of these exchanges, it's thin, really thin. And as soon as it comes on, whoosh, they'll take 1/100th of a Bitcoin, whoosh, they'll just buy everything in a tranche, whoosh, it's gone. But here's the thing. They're talking the whole yappity yap. Oh, got to protect the investor, protect retail investor from risk. But I just listed you an entire portfolio of things that were defunct, that were considered tier 1 assets back in the days. Oh, Enron, too big to fail. All the banks, too big to fail. That's as solid as solace. Thanks, Jim Cramer. And they just collapsed days later. Net assets, was that Granite shares 2x long NVIDIA daily ETF. Oh, you don't think a 2x long is a dangerous play for a retail investor, and they're offering this product, and nobody's blinking an eye looking at all these other ETPs and ETNs out there. Sheesh. And, a couple good points are made by this. If no Ether or crypto ETFs are available out there, then there should be no triple leveraged gold ETFs or ETNs, no double leveraged natural gas, double leveraged NVIDIA. You got to protect the investors, right? You got to. And here, talking about scam coins and scammy stuff, crypto scams, scamity-rama, the scams, BitConnect. Remember that one? Here, I got even a scammier one than the FTX one for you. I got double scammy. I got FTX and BitConnect wrapped into the scammiest scam of the scam. 27 trillion in circulation, unlimited market supply cap, only one node running. 25% of the supply was minted in the last 6 months, and 1% of holders own 30% of the network. Oh wait, just kidding. That's the US dollar. Put that in perspective on who's calling what a scam. It's nothing more than to try to protect the interest of the banks to allow them to accumulate what they need to run their ETFs. It's almost sickening that they're using Congress the way these politicians are so bought and paid for to do the bidding of these, mega banks that want to get the Bitcoin, but they can't because they see the liquidity, and now they're trying to shake people out of the market by scaring them like, oh, Bitcoin's not, they're going to crash because it's not going to be in the ETF anymore. It's exactly what they're doing. And so, Ethereum was another one that was going to be listed as an ETF, and then they just come out yesterday and said no, and then you watch it crash 10%. And then Solana was going to be the third one, not financial advice, just following what was being Franklin Templeton, trillions under management, and they were going to start their own Solana and also Encore, and they knew what others were going to put out a Solana ETF. So you start to see the major ones that actually have usability and utility across many specters that can link not only real-world assets, but actually digital assets and also financial assets on the Wall Street side, jumping in and out of crypto in a single swap, or you can jump back from a physical asset back into what you consider money again, back and forth between assets to your stock account back into your crypto account over to a physical asset, all in a single swap that fast. That's what these are for, so you can cross swap across all assets. Is it truly what it is, or are they trying to delay the market so these other larger banks can swoop it up while you're not looking? You think Solana's going to stay at $180? Not up against an ETF. So take a look at what's truly happening across the world with this. The Ethereum ETF iShares Grayscale. It's the same players that were going to start the Ethereum and the Solana ETFs, but no, see how they pushed it back. Prices crashed. They're going to accumulate while it's crashed, but keep your eyes open because there's a lot of shenanigans going on, and the shift of the economy is in play right now. It's scary to see what's happening out in the world outside the U.S. once you get out of the homeland. Anyway, thanks for watching. Bye for now. David Devine signing off.